Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 30th of November. I'm Daniel Lam, your host for the podcast. I was on holiday in Kyoto for a few days with my wife and my little boy. I left early by myself because I had to defend that, eventually ill-fated rapid chess championship that I talked about in yesterday's podcast. The Osaka airport was full of people, and amazingly, there were 70 people that could not clear the security check in time for my flight, resulting in a massive delay. The cheap yen must be one of the reasons why there were so many visitors to Japan. Now, one of the key drivers of this yen weakness is that it has been used as a quote-unquote funding currency in carry trades. So, for example, investors have been shorting yen and using the proceeds to buy the dollar. Now, the dollar has been performing strongly on the back of Fed interest rate hikes and outperformed all the DM currencies over the last few years, while the yen has been underperforming other G10 currencies because the BOJ is the most dovish central bank within the G10. However, there are reasons to believe that we may have witnessed the pinnacle of this dollar-yen carry trade. So first of all, we may have seen the peak in interest rate differential between the US and Japan. US economic data has been weakening, and there is a growing narrative that US rate hikes may be behind us. On the other hand, while the Bank of Japan has been, quote-unquote, erring on the side of caution, showing a measured pace in removing the easy monetary policy, the tightening trend still appears to be there. Secondly, carry trades work the best in a benign economic environment with low volatility. So why is that? Well, it's because carry trades tend to be levered, and especially so for long dollar, short yen, perhaps the most liquid carry trade around. Now, whenever volatility rises, high-flying carry trades almost always come off violently as margin calls get triggered, and in this case, it may lead to potentially strong short covering on the yen. The day of rising volatility in FX appears to be getting closer and closer, with US dollar being the reserve currency and the Fed pivot likely coming to us in 2024. Now on the chart, the dollar yen have failed to break above the key resistance near 152. Technically, the pair is still on an uptrend, and there are important support levels at 144 and 138. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.